All right, hello, and welcome to Camel Finance. I'm your boy Camel, and this week is going to be quite volatile. It's already shaping up to be quite a volatile week. There's an awful lot going on. We've got an absolute unit of a global calendar this week, including 3 central bank policy decisions, 4 central bank chair speeches, US PMIs, consumer confidence. Thursday's agenda is wild. We also look to close one of the strongest January performances in the history of the S&P 500. It's going to be a big week, and you can see all of this here that is coming up over the next couple of days. And in addition to this, after the bell on Thursday, Apple, Amazon, and Alphabet are all reporting their earnings. So for me personally, I expect a lot of volatility around all of this. But I think, for me at least, any price action that happens between now and Friday, I think is pretty much just noise. Okay, there's going to be a lot of chop, there's going to be a lot of games played around all of this, there's going to be a lot of volatility. And then when we've got the likes of Apple, Amazon, and Alphabet reporting on Thursday after the bell, we're really going to find out which way these markets are going to go for sure. So for me, I'm just expecting a whole lot of noise and chop until Friday, and I'll be using Friday's close to let me know for sure which direction the market's going in. Bitcoin, as usual, doesn't care. It's increased by 43% in the first month of 2023, so well done Bitcoin. You can now buy Starbucks coffee with Bitcoin in El Salvador. So here you go. All you have to do is, as per usual, scan a QR code on your mobile, and as quick as lightning, you can pay for your coffee. Billionaire Ray Dalio says there will be a competition of monies, and Bitcoin is part of that competition. He says he looks at it as an alternative to gold. Now, for me personally, it's more of a supplement to gold. I don't know why you have to choose one or the other. I often say this on this channel. I think both have their place in a diversified portfolio. Twitter has begun applying for regulatory licenses to enter the payments businesses in the US. So initially, as far as I can see, this is just for fiat currency. However, Elon has spoken about the potential to add Bitcoin and crypto at a later date. Over in Hong Kong, 90% of Hong Kong and Singapore's wealthiest investors say they will buy or already own Bitcoin and digital assets. So this is not going to continue to go unnoticed by the higher net worth individuals. And as we can see here, they are already starting to notice that they need exposure to Bitcoin. From Hong Kong to Nigeria, they are now paying a 100% premium to buy Bitcoin at the moment. Their country is transitioning out of cash to paperless CBDCs. Many can't withdraw cash, and this is forcing the third world to figure out Bitcoin at a much faster rate than the first world is. It's very moving, and you can see here screenshots where they are currently having to pay over $47,000 for one Bitcoin. From Nigeria to Brazil, MasterCard and Binance are launching a Bitcoin and crypto card over in Brazil. So again, we're continuing to see this adoption. We're continuing to see this thing worldwide. Bitcoin is on the verge of being legal for payments in Panama as a Supreme Court is currently reviewing a bill. This is the last step before it's officially law. Again, another trend we continue to see is more and more countries and nations adopting the Bitcoin standard. And yet another trend we continue to see is Bitcoin's hash rate. The number of miners plugged into the Bitcoin network, securing the network, is at another all-time high. And this is not only the absolute value at all-time highs, but this is also the most aggressive 30-day increase we've ever seen. This massive growth in the miners translates to Bitcoin being significantly more powerful than the top 500 supercomputers, as you can see here. And something else worth pointing out is it took Bitcoin just 2 years to get ahead of the top 500 supercomputers in the world. I've said this many times on this channel, Bitcoin is the only secure database on the planet. So what does all this mean for price? Well, one way we can try to model price is using the scarcity. This is Plan B's stock to flow model, and it's currently the only known way to model based on scarcity. Plan B says the Bitcoin bottom is in. 2024 halving, we should be above $32,000. And by 2025 in the bull market, we should be somewhere between 100K and $1 million, shown by this yellow box here. We're currently trading at a significant discount to the stock to flow model. Does that mean we're going to start to catch this up in the near future? I think so personally. And so from Bitcoin to traditional finance, you can see here, we have a 99.1% chance of seeing a 25 basis point hike. Of course, we get to find out tomorrow at the conclusion of the FOMC meeting. This could set us up for a nothing burger or some quite severe volatility, because if we get a 50 basis point hike tomorrow, as you can see, this is not at all priced in. The market will have to correct significantly. The bears will be salivating over this move. So if you're a bull here, if you want to see constructive repair, if you want to see continued follow through on these breakouts we've had as of last week, then we really need to see a 25 basis point hike. There are still plenty of reasons to be bearish though. A recession is just a matter of time for the economy. So the 10-2 yield curve is the most inverted it's ever been since the 80s, as you can see here. This is horrifically inverted. So it doesn't mean a recession is likely. Yes, I think so. But can we put in a set of new highs first on a manipulated blow-off top move with markets front-running a Fed pause? In the meantime, that of course remains to be seen, but at least we'll get to find out this week if that holds any weight at all. There is a lot of cash waiting on the sideline, as you can see here. The Fed is on Wednesday, of course. Henrik here says, in his opinion, all price action until after the Fed is not worth noticing this week. And that kind of ties into what I said right at the start of this video. I think we need to get through the Fed meeting on Wednesday. I think we need to see all that economic data that I showed you at the beginning. I also think we need to see how Amazon, Apple, and Alphabet earnings are. And from there, we will get to find out, once the dust has settled, which way these markets are going over the next couple of months. The small trader put to call premium 10-period moving average is now at the levels seen during the dot-com bubble and the financial crisis, as you can see here, here, and here. It's not often retail's on the right side of the trade, but there is a first time for everything. At the same time, we have subtle hints that the market wants to move higher. Look, high beta stocks are breaking out. That's definitely a sign of a recession coming. I think that's sarcasm. Maybe even a market crash if we're lucky. Again, I think this is further sarcasm. Now, that doesn't mean we couldn't roll over. Doesn't mean we couldn't roll over and set new lows imminently. It doesn't mean the Fed couldn't come out tomorrow and spoil the party. It doesn't mean that perhaps we could get an earnings miss from those big three on Thursday after the bell, and that could weigh down on the indexes and lead us to resolve to the downside. But for now, we have broken out, especially in high beta versus low volatility, and Bitcoin is out, remember, as well. So things continue to hint at us that they want to say goodbye to this bear market, but we certainly have to endure a lot of volatility in the meantime. So keeping in mind, I don't have a great deal to say because I'm not really paying attention to the price. I don't really put much weight on the price action until the end of the week. But the dollar, as you can see, right into double resistance. So can it break above this blue upward sloping support line that goes all the way back to here? Maybe. Is it going to do that and a breakout of this downward sloping orange resistance line? Are we going to get that? Or are we going to get some kind of bull trap that then rolls over and moves lower? That, of course, remains to be seen. I have almost been stopped out on my gold position, as you can see, so that's fine. Either way, we're walking away with plenty of profit. If you've been following the channel, you'll be well aware of that. Silver looks like it wants to do what I wanted it to do, which is roll over and then look to buy a breakout down there. So for now, still sat on the sidelines. Again, lots of volatility in the meantime. As of today, I just took the profit on both of my miners. It's a very small profit, but I think gold is going to undergo this big sort of corrective move down. So I've got enough exposure. I've walked away with plenty of profit. We did well to close profit out of gold, out of silver trade, and I'm walking away with a small amount of profit on both the miners. So both of these positions are now off. I will reassess if gold can find some sort of cycle low, but for now I'm happy to sit on the sidelines and I will make sure I update you if I do anything with that. But for now, I have almost no precious metal exposure at all, apart from this half a position that's left on gold. So if we get stopped at 1985 here, then I will have zero precious metal exposure for a little while walking forward, and I will be happy to sit on the sidelines and reassess. I'm pretty sure we're going to get a nice sharp sell-off, and then we can look to re-enter somewhere. So stay tuned if you want to see how I do that. Things still don't look too damaged just yet. Again, I think a lot of this volatility is going to be noise until the end of the week, like I've said a couple of times already. XLC still pushing up, not much to say about that. Geo still chopping around inside of its box, so I've said a bunch of times the stop has been moved to here. Either way, we're walking away with some profit on that trade. The yields look like they want to start to potentially roll over, but perhaps we're going to see these move higher after the Fed hikes rates. That, of course, remains to be seen. In terms of crypto, is this the half cycle low shakeout I was talking about, or have we got to put in another one or two red candles to really cement this half cycle low before we can move higher? That, of course, remains to be seen. But for now, long and strong continue to push. The same is true of all these other crypto positions, so I'll spare you repeating myself over and over again. Looking at Apple, Apple wants to come in for a back test by the look of it, so nothing wrong with that. If you were long there, then no need to panic until we get underneath this blue downward sloping resistance line. For now, though, I guess we'll see how the earnings are on Thursday. Tesla, this was quite a sharp move to the upside, but I've no problem seeing a little pullback in the short term. I've no problem seeing some volatility in the meantime. I'm going to continue to push this trade, so long and strong continue to push. Same is true of all of these Bitcoin-related equities. The UKX is starting to look a bit worrying. It's started to look to me like it wanted to break out. Is this just a retest before resumption higher? But I've said a bunch of times, if we lose this level here, then I don't want to be anywhere near this trade. So I'm pretty close to cutting this for now. But all the while we're above this upward sloping red resistance line, I will continue to push this trade. And hopefully this will turn out to be a breakout retest resumption of this downward sloping red resistance line here. The VIX, interesting action from the VIX. Is it trying to break out? Is it time to put a hedge on? I want to see some daily closes. I want to kind of get through the volatility here. But if this starts to really get away, then we might have to put a hedge on and just take the stop if it happens. So paying close attention to this. If you're a bear, you want to see this thing break out and go pretty sharply as the stock market plunges. And if I'm right about this melt up, then what we should see is this turn out to be a trap that then quickly comes back down and starts to make lower lows. So keeping a close eye on this. No position from me as of yet, but possibly looking to get long if this. The Dow Jones is still in no man's land. So are we possibly going to get a little plunge down before we go higher? That of course remains to be seen, but a whole lot of sideways action for the moment. NASDAQ still out of the downward sloping red resistance line. So we had breakout retest resumption, still holding this orange support line for now. So we can tolerate a move pretty much all the way back down here before we get too concerned, but lose these levels and things start to get a little bit concerning for the NASDAQ. So keeping an eye on that for now. And the same is pretty much true of the S&P 500. The orange line here, if we lose this level, which I think we're likely to do today potentially, then that's your first warning sign. But so long as we're above the blue downward sloping resistance line, then we could argue this is a breakout retest resumption. Lose this red level here though, and things start to get very bearish very quickly, I would think. We're pretty close to finding out which one of these cycle counts is correct. I actually favor the green one at the moment. And the reason I say that is this is just a really weird structure because we've had this drop into a cycle low that came up, failed cycle, but then we came up and made another high or an equal high. So I don't like this blue count as a cycle count at the moment. I'm actually favoring this green count, but we need to see a few more days of price action before we can figure out which one of these is correct. So all in all, lots of volatility, lots of chop, lots of noise, and we just need to get through that so we can figure out which direction the markets are going. At least we have all our technical levels, so we know when the market tells us to do something on a daily closing basis, we can react and position accordingly. It's going to be a difficult week when there's volatility and chop like this and lots of games being played. It's really, really difficult as traders to remain completely unbiased and unemotional. So be mindful of how you're feeling. If you're feeling any signs of panic or euphoria or anything like that, be mindful of that. Remember to zoom out and look at the charts from, you don't want to be looking at your charts from in here like this. Okay, this is a no-go. You don't want to be staring at this and watching the candles bounce up and down or zooming in and out. Make sure you've got your perspective. Make sure you know your levels. Make sure you're nice and calm. And remember that there is going to be a lot of chop. There is going to be a lot of volatility, and we need to get all the way through Thursday's earnings before we can start to have confidence about what's going to happen to the markets. If, of course, those technical levels are violated in the meantime, then that will give us actionable points to trade from. For me, it's all about the daily closes, and as ever, we take it one day at a time. Let the market tell us what to do. So if you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, and turn the notifications on if you want to continue to get updates on all of my trades and positions. I think there'll be some precious metals entries coming up in the near future. So I'm noticing lots of these YouTube influencers, lots of Twitter people, lots of mainstream media coverage of precious metals and silver is now the time to buy. People are saying, oh, I've just bought a bunch of gold. And I don't like that, to be honest. I don't like that at all. The time to buy gold, if I hop into this chart, was of course all the way back down here. Okay, we did well buying this breakout. We flipped short here and then we got long again here. So this was the time to buy gold all down in this neighborhood. Buying it up here, just to me, doesn't seem like the right call. Doesn't mean that we couldn't perhaps get some sort of technical, something like that, and we could draw a line and buy the breakout and target the top of this range. I'm open to any possibility and any outcome, but I always get wary when I see a bunch of people that don't really trade and don't post their positions and don't post their call outs ahead of time start to tell you I'm buying gold after this massive move. Like this in my opinion is not the time to be buying gold. The time to be buying gold was down here and on this breakout here, like we did live on the channel. So if anyone's telling you to buy gold at the moment, I'd just be a bit wary of that. The same is true of silver. Silver to me looks like it wants to do this big sort of plunge shakeout before it can go again, and that will provide a massive opportunity as and when it occurs. But again, jumping in now when you've got this big rounded top, we spent a long time here and couldn't break out and target the top of this range at around $30. So to me, this is not the time to be buying the precious metals, but I am sure once we get this big shakeout, once we get this big flush that I think is coming over the next couple of days or weeks, that will be the time to then attack these precious metals again. So if you want to see all of that, if you want to see how a pro swing trader deals with all of this, then make sure you hit that subscribe button, turn the notifications on. And until next time, look after yourselves, take care from me. All the best. Cheers. Bye.